Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, October 19th at 6:20 as I'm starting the video. And as always, please run your player at 1.25x. Let's take a quick look at futures. See a lot of green on the board today, which is nice. Equity is up between 0.3 and 0.45%. Oil's up 1.2%. We're pushing, I think, 7 or 8 year highs at the moment. Copper up 1%, right at all-time highs. Nat gas up 1%, gold up 1%, silver up 2%. Over on macro, we've got some housing start data this morning, and we've also got the Red Book. On the earnings front, we've got Johnson & Johnson before the bell, Halliburton, and Procter & Gamble. And then after the bell today, we've got Netflix headlining the names after the bell, along with United and Canadian National Railroad. Might be interesting to hear them talk about rail volumes and logistics and that kind of stuff. Seems to be in the news. So let's dive right into it this morning. I'm going to let the stuff with the dollar and the VIX and rates go this morning. Not a lot happening yesterday. We're still in the ranges that we've been in for the last few days. So I want to jump to a chart that I haven't shown you in a while, but we just had some development, so I want to show it to you. This is a chart. This is a ratio chart, and what I'm doing is it's a ratio between XLY, which is discretionary, consumer discretionary, and XLP, which is consumer staples. So I've got an offensive sector divided by a defensive sector. So if I've got offense on the top and defense on the bottom, if that ratio is going up, it's going to be bullish, correct? So we've got, if this chart is rising, we've got an offensively minded or a bullishly minded market, at least by these measures. And when we go down, it's bearish because more money is flowing into defensives rather than offensive sectors. Now, as we go along here, this goes back to 2017. We had that big run up. I think this is when Trump was elected. We had that big run up, and then we pulled back, and then we had COVID, and then we came up again, etc. Well, just recently, we had been in consolidation. We broke out of that just here in the last few days. So now we're in a whole new upper regime of this chart, and you can see on the RSI and the PPO that, well, let's just look at it. The RSI has been operating in its bullish regime the whole time, going back to right after COVID, and the same thing with PPO. And we just recently, at this peak, we rolled over on momentum. We came down, but we never crossed the zero line. And then we've now just had a bull cross near the zero line. And the thing for you aspiring chartists out there, the RSI and momentum, PPO, or if you prefer MACD, you use them the same exact way that you would on a price chart on any of the names that you're charting or familiar with. So in terms of looking for bullish setups, it's exactly the same way. You want to see momentum above the zero line, and you want to see RSI above 50, and you want to see a price confirmation. And we got that on this breakout. So that tells me that at least in this measure, we've got an offensively minded market. Now you can go through and look at the other sectors, and you can always take a ratio between, let's just say, financials, XLF. You can go XLF divided by either SPX, SPY, or either SPX or SPY, whatever you prefer. And if you see that ratio going up, then you know that financials are outperforming SPY when that ratio rises. And then what you can do is put your normal trend analysis on that ratio, and at a certain point when financials go out of favor, then you'll see that ratio roll over, and then you'll know that it's probably not a great place to be as far as allocating money to that sector, because now that shows you that you're underperforming. So this is a good one to look at as far as trying to determine, are we in an offensive mode or a defensive mode? And so with this breakout here, I feel a lot better about that we're back on track in terms of offense as we plow into the fourth quarter and look for a run towards the new year. Now on SPY on the 2-hour chart, just keep moving higher. We came up here. We've got a level here at 447. I think that's a very clear pivot for you today. We've got yesterday morning on the open, we had a reach down into this gap, but you can see it maybe got halfway, maybe a little shy of halfway, but it didn't fill it, so I'm going to leave that one there. So if we can pop above 447 this morning and then hold it, if you had been long, at any point, and you still have a long, once we clear 447, I think it would be a good idea to either advance your strikes or your stops, however, depending on how you're positioned. But I think that's here's the highs right here. So we're not that far away from being right back at the highs. So I think it would be a good time to move up your stops in case we, make a little move up and then reverse somehow. You'd want to protect these gains if you were in at that time. And then on the 30-minute chart, we've just got some granularity here. 447, 449, 451. So that's about $2 increments on resistance on the way up. And then we've got this open gap. And then we've got a layer here at 441, 441.50, where if we came back and filled this gap, I would want to see it hold that 441 level at this prior high and where all these little support areas were. I think moving back below 441 wouldn't look so hot, because you can tell it's kind of like, here's the bottom half of the chart and here's the upper half of the chart. We've just moved into the upper half, so we want to stay in the upper half and move ahead towards those prior highs. Q's had a good day yesterday. There was a big gap in here, which I've since removed as price has moved right on through. You can tell that we're coming up on a pretty decent level of resistance at 374. You can see here resistance, 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 and then over here this level acted as support for all this trading here. So that's going to be a big level this morning to see if we can number one, fill this gap, which I would anticipate happening, and then move ahead above 374 and then grind higher. So just using the same methodology just talked about on the SPY, I think 374 is going to be a great place to kind of reset the table in your positioning. That if you were, if you got long here, I mean, you've got a lot of embedded gains. I mean, even if you got here, the other day and got long, you've got some nice embedded gains. I would make sure you got paid for all that good work that you did and then reset at 374, maybe buy some extra time. Think about, we've got the mega cap earnings coming up. We've got Netflix tonight. We've got Tesla tomorrow. I have not really seen where Apple and the other mega cap names are going to be. But if you're going to be bullish Tesla and the FATMAAN names, an easy way to do that is just be long the Qs, because they're the biggest components in the Qs. That makes sense. But then that you wouldn't have the single stock risk of saying, okay, I'm going to hold Apple or I'm going to hold Microsoft or whatever. So what I would do if you're offensively minded, and I think with FATMAN, I think they're going to blow it out of the water. Now, how the stock reacts, we don't know, but I can only assume that they're going to be bullish. But you want to make sure you get paid for all this, all that good work, that advance, and rotate your strikes up, buy some extra time, kind of do a reset centered on 374, and then see if we can push up towards 382 and take out these prior highs. That's what I would be looking to do. Now here it is on the 30-minute chart. Here's where that old gap was yesterday that I removed. And so you can just get a little bit better granularity on the levels here on the 30-minute chart. But I mean, looks good. Little bit overbought up here. What I would be looking for there is just to hold above 70. You don't want to, if this were to roll over and move down below 70, you're going to be seeing that in price. And you'd also see PPO roll over. So if you're long or actively trading the Qs, keep an eye on your RSI, which is overbought at the moment. But remember, overbought isn't a sell signal. It's just telling you how, I use it as a strength meter actually, that as long as it's overbought, it's strong, and just stay in it until it gives you a reason to get out. And that reason would be, rolling over, dropping back below 70 would be a bearish signal. I mean, absolutely nothing to talk about on IWM. Didn't do anything at all. Same setup as yesterday. I think you've got your pivot right here at, what is that? 225. I think really between, 224, 225, you want to be long. I know it's been a frustrating trade because it really hasn't done anything, but it's positioned to go higher. Whether it does or not, I can't tell you. I'm still bullish on them, but if it were to drop down and fill this gap and then move towards 221, then of course you've got to readjust your thinking. And just like we've been talking about on SPY and the Qs, we want to see IWM stay in the upper half of the chart, because to to move lower, obviously that would mean, targeting back towards the bottom of the box and retesting these lows back in the chart. I really don't see that, but you got to be ready for it. Here's some granularity on the 30-minute chart. You just see this 225 level. You can see a lot of activity right above it, and we had a little look into the gap yesterday morning. That quickly got bought up, but there was just no power in that particular name yesterday. Now, if you're new here, welcome to the channel. I really appreciate you spending some time with me this morning. If you like what you see, hit the subscribe button and the alarm bell. That way you'll be notified of whenever I post YouTube content. And then please jump over in the show notes. You'll see a place where you can, a link to register for all my content. That way you'll get everything sent to your email box. And usually each and every day, there's something that I see during the day, whether I put together a video or just send out a quick note, you will get that in your email box and you won't have to look for it. We'd certainly love to have you on the team. And longtime listeners, please pass along my link to someone in your trading group or someone that you think might benefit from the work. I'd really appreciate that. So Facebook had a nice little day yesterday. Doesn't look like a lot on the chart, but it was up $10, 3%, right down here to the bottom of this overhead gap that I have running from 335 to roughly 342. That would be a nice one to be on board for if you, if price is going to fill that gap. That's going to be a nice trade. Do take note that price had been in the gap one time before back here and got rejected at this midpoint line at 339. So this looks set to enter. Just remember that there's a little line of resistance here at 339. But above that, then you got a gap fill to 342. And then it would look like it's well on its way towards having a trend change. Broke the downtrend line. We've got a higher low. And we've got a couple higher highs. So that's a good start. And the momentum and RSI are picking up as well. Apple, good day, 1%, 1.2%. There was a gap in here that this filled. So now today, 147 is your clear pivot. And, if we pop above that, then your target's going to be 148.75, and then right on up the line. Pretty much every $1.50 was a level back in the chart. So as it just recaptures those levels from below, those are opportunities to move your stop up. And if you're new to the chart, or if you haven't been trading it and you want to, then don't look at this from the standpoint of, oh man, I missed the move. I could have got it down here on this little double bottom, or I could have got it here or here. That's all true. But look at how far it's got to go just to get back to the prior high. So even if you're new to the chart today and you've never traded it in your whole life, you can pick it up right here at 147. Or you can say, okay, I'm gonna let it settle in, and then if it takes out this next level at 148.75, I'm gonna get long, and then I'm gonna have my stop just below, and then I've got my upside targets already identified, and then I'll see if we can get back to new highs. Tesla's been, running like a banshee. Just absolutely great price action. And I know some of you guys are in it. Congratulations. That's been a really nice trade for the last however many days. And, we've got that adage out there, easier trading comes after hard trading. We spent quite a bit of time, down in here, if you remember. Just, every day was a struggle, down then up, not really having any momentum. And then we broke above this 760 line and made an initial move. You'll remember that. We can go back and look at it here. Yeah. We spent a lot of time even back here thrashing around. We finally got that breakout at 760. Then we went back into consolidation mode. I'm sure a lot of you guys were, very frustrated. Fake breakout. Then you get the real breakout right here. So, that's just a, this is a patience test down here. If you're trying to trade Tesla, those are all, how patient can you be? And are you going to be the guy that gives up and then misses this? So just remember that after consolidation comes easier trading. And once all this consolidation was digested, then you got a much easier trade. So now we've got a couple of gaps down below, and now we're pushing to all-time highs with earnings. Yeah, earnings tomorrow after the bell. So be careful. I'm a guy that doesn't like to hold through earnings. If you've got a different philosophy, that's great. That's fine. Just make sure that if you were in this, make sure you get paid for it. And if you want to, do a lottery ticket on earnings, that's up to you. But make sure that you've taken all this to the bank if you were involved in that, so you don't have everything that you had at risk into earnings, which is more or less a dart throw. Microsoft, all-time highs, right? All-time highs you got to buy. Broke out yesterday. Keep in mind we're in this rising channel. I wouldn't be surprised if it moved up a little bit and maybe consolidated just a little bit. I would check and see when earnings are. I'm not quite sure when that is, but might get a run into earnings as well. So now you've got a beautiful line to shoot against. If you've never owned Microsoft in your whole life, this is as good a place as any to get involved. Why? Because anybody and everybody that ever bought is profitable, and there's no natural sellers overhead. So you can get long here at 305 and see where it goes. I would not be surprised. Remember that Jesse Livermore adage, when it crosses par, 100, 200, 300, once it crosses those barriers, you can expect bigger moves or easier moves after those psychological thresholds have been taken out. So here at 305, I think you can be nothing but bullish. Amazon, we had this really strong day on Friday, and then we've had follow through. Yesterday was up 1%, almost $40 inside this gap, and then we've got layers to go all the way up. So I think anything north of 34.30, you can be bullish. I expect this gap to fill and to move higher. Google, same thing. Nice little run. Filled a big gap that was in here that I've since taken off the chart. I think you can stay long against 28.40 and then look for 28.60 and 28.90 on the way up. And if there's any kind of backsliding, I think 28.10 is your support. Netflix, right back up to the top of this consolidation box. We've got earnings after the bell, so there may be the potential for a run into the print. I would be a buyer. If you want to try that, I would be a buyer at 640 and then see if you get a 10 or 15 or whatever kind of run it wants to do into the print. If that happens, and you've got a very clear line here at 640, and if it comes up and then falls back, I would have your stop just below 640 if that if there's any kind of a fake breakout and then pullback. But you can see that the PPO has reset here right at the zero line, and that's what you want to see after a consolidation where the momentum comes out, but it doesn't spend a lot of time below the zero line and then curls up right at zero. And that's usually what refreshes the stock and gives it the momentum to go forward. And then lastly, semiconductors had a pretty decent day, up 0.8%. We are coming off of this double bottom low structure at 260.50 is where we broke out. I've got a measured move target up here to 273. There's nothing in the chart that tells me at this point that price can't do that. We've got a rising momentum, rising RSI. We are a little bit overbought, but as long as we can stay and hover at or around 70, and as long as we've got this price momentum heading north, I think all systems are go. Today, I think 265 is your pivot. You've got the gap entry here at 268. And really, once it enters the gap and fills it, you're basically already there. So I like semiconductors. If you were long from this double bottom low or got long anytime along the way, I think at 265, that would be a great place to roll up your strikes, roll up your stops, take some of that money to the bank, get your risk back in line, and then if there's any nasty surprises, most of your money is safely tucked away. Let's wrap it up there. This has been Chris Buss with Trader's Profit Compass. Have a good day of trading, and talk to you next time.